What is going on, investors? Hopefully, you guys are doing well out there. We are live to cover Broadcom's Q3 earnings, which they reported maybe about 3 hours ago here on the Pacific. It is now 4 p.m. Pacific time. We'll get you in and out before the NFL football game starts. I think it's about an hour from now. So we'll go through things rather quickly when it comes to Broadcom. This is obviously a stock that we've covered relatively well over here on the channel 5 months ago. I said, give me 15 minutes. Why the stock would hit $600. At the time, I think shares were closer to 180. And now in the after hours, after reporting those Q3 earnings, shares of Broadcom retesting the highs that you made back in August at about $318 per share. We'll talk about technically where this one could go from here. We'll also discuss this one technically as well. We'll also look at the conference call. Conference call is where it's at with Broadcom. They often give you a lot of insight and a lot of color that you don't typically get with a lot of companies. And Hock Tan, the CEO, getting extended with his contract through 2030. We'll talk about some of the things that he talked about on the conference call. Shares were kind of bouncing around between flat and down at the start of the conference call. And then he got on the conference call and started talking up 2026, started talking about a little bit about 2027, and shares are now, again, basically at all-time highs on Broadcom. And there's a lot of good reasons for that. That's because when the company announced their Q3 earnings, they were up 22% over the past year, $16 billion worth of revenue. Just absolutely fantastic from that standpoint. They also gave you guidance for the fourth quarter as well. That's the upcoming quarter for Broadcom, saying revenue expected to be at $17.4 billion. The consensus estimate on Wall Street was for $17 billion. The high-end estimate was for $17.7 billion, the low end for $16.5 billion. So they're coming closer to the high-end estimate. It also makes you wonder, well, Q1's probably going to be a decent quarter for them, probably over $17.7 billion. And then they started talking about 2026 for this company. As you move into 18, 19, $20 billion, they are basically saying that things were going to get even better going forward. Now, on the conference call, things are looking really, really good for Broadcom on the conference call. He says that they have robust demand for AI. Bookings were extremely strong, and there's a backlog for the company is going to hit $110 billion. We'll talk about this here in a second, but this is one of the first time I've ever seen Broadcom give what they call a backlog number. Now, this is common for some companies, so mainly software companies, but they are saying that their backlog of business is now $110 billion. Their XPU business is essentially a fancy term for GPU. So NVIDIA sells those GPUs that go into data centers. Broadcom has a similar type of thing, and they call it an XPU. They say that's now 65% of the business, and demand for XPUs continues to grow among the three leading customers. And we'll talk about it, that they announced a fourth customer on the conference call, and they have three others that are potentially in developments as well. And that's what they said on the conference call. This initially got the stock to perk up a little bit, as they have one potential customer now moving forward with a custom XPU design. And that led the company to already start talking about 2026. I'm assuming this is probably fiscal 2026. Again, this company is essentially a quarter ahead from a fiscal quarterly system. So the upcoming quarter is essentially Q4, and then you move into Q1, which is kind of calendar Q4. So as you look over the next, 18 months or so, this company is expecting revenue to improve significantly over what Broadcom indicated in Q2. So just last conference call, they're already upping the guidance. That caused shares of Broadcom to move higher by about 2%. And now they have 4 confirmed customers for XPUs. These, again, are custom GPUs for the data center. We know one of those customers is Google. We know another customer is Meta. The other customers, Amazon, Microsoft, OpenAI. probably Apple as well, potentially. Now, you've got Q4 AI revenue at $6.2 billion. That was 66% growth year over year. Non-AI semiconductors, they continue to supply semiconductors into the wireless and broadband, kind of the AT&T and Verizons of the world. That continues to be slow to recover, although he indicated later on the conference call that order book is higher, but that sometimes the order book increases and then it doesn't follow through. But he has some optimism that non-AI semiconductors would, again, it's becoming a smaller portion of the company's business, could perk up as you move into next year. Now, Q4 software, they obviously own, I believe, 3 or 4 different software companies, primarily VMware at the current time. Revenue expected to be at $6.7 billion. That'd be 15% growth year over year. Hock Tan always delivering early on the conference call, and he will continue through 2030. He's currently 72 years old, but obviously, as you know, with the medical miracles and all those types of things, 72 is probably the new 62, at least when it comes to executives. I hope I'm saying about that about myself when I get to 72, and all of you watching as well. Now, what has changed? We kind of moved into the conference call where the analyst gets to ask questions. And the first question was, what has changed with Broadcom to allow them to provide higher guidance for XPU sales for 2026? And they said, look, it's this new 4th customer that's going to ship strongly in 2026. And so they have 3 customers already, and those 3 customers continue to increase order after order and move on to a next generation. And now you got a 4th customer coming in and doing the same. Now, with the updated growth rate of Broadcom's XPU revenues for 2026, the analysts kind of wanted to know, right now, XPUs are growing at 50 to 60%. And that's kind of the quoted growth rate that the company has given going forward, and that they say that it will actually accelerate and that it will be a fairly material improvement. And that a big part of the growth will obviously be these XPUs, which again are customers like Meta and Google, which have obviously big investments as it relates to the data center, the LLMs, and they view this as a heavy competition and a competition that they have to win. And so this is spending that is almost guaranteed to show up in 2026 and potentially even further out than that. Now, they are gaining share with their existing 3 customers with XPUs. The 4th customer is going to start shipping in 2026. Once they said that, shares of Broadcom ticked up all the way up over 4.5%. Now, one analyst said, hey, you've never really given us a backlog of business over at Broadcom. So now they're explicitly saying they have $110 billion worth of backlogged business. And they said, look, we don't normally give that out, but it's largely driven by AI and the visibility that they have with these customers that have these huge, deep pockets. These customers are able to commit into 2025. And we'll talk about something that was said on the end of the conference call here as well, but they continue to gain share as well. So yes, Google and Meta and Microsoft, they're going to be customers of NVIDIA, particularly when you look at Google and you look at Microsoft, you look at Amazon. They are going to be customers of NVIDIA because they are leasing out that excess capacity or some of that capacity to cloud customers. So if you're a startup and you want, access to NVIDIA GPUs, you're not going to buy them yourself. You're going to go rent them from Microsoft or Amazon or Google, one of the 3. But with all of these companies, and particularly when you throw Meta in the mix, because Meta doesn't have its own data center where they're leasing off the excess capacity, at least at the current time, certainly a business that they could get into in the future if they wanted to. But what we are seeing with these customers is they continue to increase their orders for these XPUs. Also, what you're going to see, if you really dig deep into the weeds and you're like, well, Colin, why is Broadcom a choice for these customers? Why are people, other than the fact that NVIDIA continues to be supply constrained and it's not easy to get the GPUs and certainly demand outstrips supply, why are these companies going the XPU route and going on designing these with Broadcom? Well, part of it is performance. So if you look at the performance that Google is getting out of their Maps product, their YouTube product, their search product, large part of that is the fact that they're on their 8th or 9th generation of their own custom silicon. And so people are seeing that. You even see it on the consumer level, right, as well. So the Apple iPhone has its own proprietary custom silicon. The Macintosh computers and the MacBooks, they all have their own custom built custom silicon, which are designed for the software. So again, it's not just a GPU, it's the GPU and the software. And you hear a lot about NVIDIA's GPU and their CUDA software library. Well, companies like Meta are capable of building their own software, and they have their own custom applications, their own ad servers. With Google, I mean, a great example is they have Maps, they have YouTube, they have search. They have these high compute intensive workloads that they need their own custom software and their own custom GPUs, and that's the direction the industry is going. And look, they said that we're not going to give additional color on the 3 customers, but they have every intention to go into full production. Hawk Tan in the past has talked about the fact that each of these customers are probably going to deploy 1 million XPUs. And he didn't back down from that. He basically says these customers are going to build out 1 million cluster XPUs, and that's what we're seeing across the industry. Now, in terms of prospects beyond the 4 current customers and then 3 in development, he basically said the market is narrow, that the customers that they're dealing with are the Metas, the Googles, the Amazons, the Microsofts, OpenAIs, Anthropics. He didn't name them by name, but you can pretty much pick them out of a lineup because there's only certain companies that are building what they call frontier or large language models, these kind of general intelligence models. There's not that many companies that can afford to build them, and there's not many companies that will build them. And so those are the companies that Broadcom is dealing with. Now, in terms of VMware, they've gone through kind of a shift where they used to sell proprietary licenses or perpetual licenses, I think that's what they called. And then they switched to more of kind of a cloud license for VMware. Of their largest 10,000 customers in the previous quarter, about 87% have switched off of kind of the perpetual license and more onto what they call VCF. Now about 90% have adopted it, but they said there's a lot of work to be done to deploy that over the next 2 years. And that's going to allow them to have a close relationship with those customers on-prem and cross-selling to cybersecurity and cross-selling them onto other things. So they're very bullish about VMware. Now, in terms of the 4 customers that are ordering those XPUs, all 7 create large language models to one degree or another. And shares were up about 4% at this time. Now they're building, here was the key sentence right at the end. He kind of gave you this nugget, and this was Hawk Tan, the CEO of Broadcom. He says that they're building multiple generations at the same time for the XPU customer. So the XPU customer has like an XPU that is going to ship probably over the next 6 months, but they're also working already on the next generation. So the one that would follow that. And he believes that their market will be higher than the GPU demand. And I kind of paraphrase this from NVIDIA. So that is very, very, very bullish. The conference call was bullish. The results were bullish. Everything pointing to very bullish results from Broadcom. We'll dive into the numbers. We have that net revenue at $15.9 billion. We talked about how that was 22% growth year over year. And look, they're guiding for 17.4 in the next quarter. And one of the reasons why I really like this company and I really like Hawk Tan is he does a very, very nice job controlling the financials. We'll go through the balance sheet here in a moment. They do have quite a bit of debt as they tacked on a lot of it to buy VMware. It was a very expensive acquisition. Although the interest rate that they're paying on that debt, I think, is blended at like 3.5–4%. So it's not very expensive money considering the growth rate and the profitability of VMware. So off of $15.9 billion, this is what we love about this company. It's grown in large part on the software side by acquisition. But you see here, the expenses year over year have not gotten bloated. So R&D over the past year, 2.4 up to 3, quarter over quarter, 2.7 up to $3 billion. But look at your selling general administrative. It is actually down year over year. So you grew your revenues. This is why I love this company. This is why you got to love this company from a shareholder perspective. Over the past year, you grew your top line revenues by 22%. And your selling general administrative cost went from $1.1 billion down to 1.072. In fact, they were down from a quarter ago as well. So you're growing your revenues, and it's not growing the selling general administrative line. So a company like Salesforce and many others probably could look at that and be incredibly jealous. Now, they have some kind of line items as it relates to acquisitions and some restructuring. Obviously, you make an acquisition like VMware, you don't need 2 accountants. You don't need, two CFOs and all those types of things. So there's been some restructuring, but the company's done an absolutely fantastic job. I want to say off the top of my head that VMware on its own was running like nearly $1 billion a quarter on SG&A. And here are a combined company growing at over 20%. And the combined SG&A is just over $1 billion. It's unbelievable. So obviously your operating income is going to skyrocket up from $3.8 billion to nearly $5.9 billion. So again, you can see what the revenue does on $15.9 billion, and what Wall Street is doing is saying, well, next quarter will probably be 17 and a half. The quarter after that, we'll comfortably get into 18, 19, $20 billion by this time next year. And Hawk Tan is as cheap as they get. And I say that affectionately. You drive by, I've driven by the Broadcom headquarters. They're about maybe an hour and a half from where I'm sitting right now. And you can almost miss them. Okay. Certainly compared to like Google's headquarters, which are just absolutely spectacular. Very humble run company from just an expense standpoint. And so your total operating expense is just $4.8 billion, $5.9 billion of operating income. You do have some interest expense, which we'll talk about here in a moment. You pull down to a net income number of $4.1 billion. Doesn't really compare to last year because you had some income taxes, some one-time charge things. Now, cash balance sheet, look, this isn't Google. This isn't Apple. This isn't Microsoft. They're not sitting on a mountain of cash, but they have a decent amount of debt. It went down though from $66 billion down to $62 billion. We'll show that to you on cash flow. And so that's where the bulk of the cash flow, at least in this quarter, went to. $7.2 billion of operating cash flow. Last year was just $5 billion. And then you go into what they spend the money on. And it's not a lot. They're not building data centers. They don't have expensive office buildings. They're, so the $7 billion flows all the way down to you can pay a dividend. And they paid $2.8 billion worth of dividends. Now, the dividend is nothing from a yield perspective, but as you continue to hold, and again, my call on this one is we are going to comfortably kind of double our, we're going to double the share count, or double the price of the shares over the next 2 or 3 years. In fact, I think it's going to triple by 2027. I think we're going to get to a $3 trillion valuation on this one. And we're currently sitting at about, we'll call it $1.5 trillion. So things are quite good for this company. And so they're going to spend this operating cash flow on the dividends. And that's where you're at. You got beautiful dividend payment, and you're also going to pay back the debt to the tune of $6.7 billion. They're going to continue to whittle down the debt, and eventually you'll get the debt to a very manageable level. The cash will stack up. They didn't buy back the shares at the most recent period, mainly because when you look at the stock, it's essentially sitting at all-time highs. Hawk Tan has kind of a Wall Street background, and then so you kind of see some of that with the way the company is run. They leverage up the balance sheet. They go buy companies, and then they, basically shed cost and shed employees, and they drive efficiencies. And, this is what you get. It's just a wonderfully run company. Now, technically, you are in this beautiful channel. I mean, longer term, you're in even a much larger channel, but the channel since the AI wave has really steepened. And look, depending on how you look at it, you are actually not far from kind of the middle of the channel on this one. And so this one actually looks pretty good. If you get a rejection here, rejection anywhere on this stock should be bought rather heavily, at least from kind of a technical perspective. Things look amazing for this company. And they're firing on all cylinders. And, here we go. So we had somebody bought Broadcom last December, actually watching my video. He had the stomach to watch it ride down 40%. And believe me, I watched it go down 40% as well. I added a big chunk to a lot of my portfolio during this kind of April drop. I didn't get it at the lows. I can't remember when I added on this one, but, so I rode this one down with you, double down, triple down, outside of a handful of stocks. This is in the top 3 holdings that I have. And, now we're up 40%. So it just shows you with a little bit of patience and, just with a little bit of patience, you can really, really make a lot of money in the stock market. And I think it takes a little bit of patience and a little bit of discipline and knowing the companies when, every company experience, or not every, but almost all companies experience this big downdraft in the markets in April. And it's just having the discipline to buy those dips, but only in the good companies. Because I mean, another company that reported after earnings today was like Lululemon. I mean, buying the dip in Lululemon has been a big mistake for a while now. Same thing with, like, we look at Adobe. Buying the dip in Adobe stock has been a disaster for a while. So, what I like to do is I like to have a list of companies that are kind of on the short list of premium companies, and I'm just constantly monitoring them for this dip. And then when you get this dip, you've got to get in there and you've got to buy it. And it's never easy. I mean, I remember buying the shares of this company, Nvidia, Amazon, Google, Meta, Microsoft in this April timeframe, and it had my stomach in a knot. But you got to do that. And that's sometimes, that's sometimes some of the best times to buy stocks is when it feels the worst. Thank you for sharing the stream, Diego. Really appreciate it. Thank you, Chris. I mean, like, look, I wouldn't be doing this if people didn't care. And so people do care, kind of on a relative level about what we're doing over here on the investor channel, on Equity Empire. And we really, really, really do appreciate it. And he bought what was formerly QXO at roughly 20, ended up going to 220. And I sold it to buy NVIDIA. That's been a great trade-off, Chris. And so QXO was a stock that we recommended. I can't remember if it was on this channel or on the other channel. And it went bananas. I mean, I think part of it is I sent the QXO recommendation out to an email file of about 500,000 people. And I want to say a lot of them went in there and bought it. I continue to hold QXO. I was not allowed to buy it when I recommended it, but I'm in it. And I want to say that I'm in it at maybe $13. I'd have to look here. QXO, I'm in QXO at 13.20 is my cost basis on that one. I still got a strong outlook for QXO going forward. It's going to be a slow grind for the company, but anytime you have great leadership, very similar to Broadcom, it's fantastic. So Fonzo bought, he made a great trade here, or a great investment, I think is a better way to put it. He bought Broadcom exactly a year ago, and he's up 118%. Tell you what, it's Thursday. If it was Friday, I'd go out and have a nice meal. And, look, Thursday, go out, have a nice meal and celebrate. It's not every day you buy a stock a year ago, especially one as covered as Broadcom. I mean, Brian Broadcom a year ago was, I wouldn't say it wasn't hard, but it certainly wasn't obvious. And so, because it was already up so much. And so being able to do that, and that's one of the mistakes I see with investors, particularly when I give out recommendations. Sometimes I'll give out a recommendation and some of the comments will be like, well, the stock is up so much already. You want to buy companies that are doing well. It'd be like buying stock in Michael Jordan after his 3rd NBA championship. Okay. He won 3 more after that. So it is totally okay to buy stocks that are on an incredible run. What you want to have is visibility into the run going forward. And with Broadcom, it's incredible. Will you increase your position at today's price? Me personally, I won't. But for premium subscribers, I am going to, we're going to open up basically a buying range for this one. And so it's close. You could buy it at this price if you have a long, 2-3 year outlook. And again, your outlook has to be that AI and everything is going to maintain itself, going forward. And so you've got to maintain that. And as long as you do, this company could, I think, very easily get to $3 trillion. Very easily. Don't say that very often as well. What is a good price to enter this stock? I mean, if you have a long-term outlook, and I believe the shares could double from here, you get to a $3 trillion valuation and the shares essentially double at that level. I think that is possible. And so buying it at 318 and watching it go to 600, it's fantastic. You buying Salesforce at the cross of the middle of the channel? I bought Salesforce this morning. I mean, I bought it this morning basically at the open. It rallied pretty good. I could sell it for like a 4% gain right now. Yeah, I bought this one at the open today. I think it was down here at like 235, 233 or one of those. Yeah, I bought it at the open today. With the downside risk of, 225 is probably a stop loss on this one. Upside, 280s, 290s, 300s. So yeah, I'm excited about that one. Adobe. I've been bearish Adobe. I like their software, continue to use it. He says, I have Adobe at minus 25%. Shall I sell or accumulate more? So 20% of your portfolio. So I would stop there and say that I would never have a stock like Adobe, and it's easy for me to say. I wouldn't have shares of Adobe at 20% of the portfolio. Adobe, I don't like. I don't like consumer software. I prefer enterprise software. Enterprise software is more defensible in the era of AI. When you have these large language models, one of the key features they're going to offer are different types of photo editing and those types of things. That is worrisome for me with Adobe. And right now, when you look at Adobe's chart, I mean, this is the proverbial, I can never say that word. This is a falling knife. This is a disaster. So I would not buy Adobe until it broke out, and a breakout would get you have to get back into the 400s. This one has made a very steady series of lower lows, lower highs. You're looking for stabilization. Looks like it's trying to find footing in this 330 area. It's certainly not overvalued by any means, but right now I would avoid consumer software until you figure out what's going on with Adobe. Accumulate ServiceNow for a while. It seems like a growth stock and better than Salesforce. I mean, I'm not going to disagree there. I don't tend to look at stocks like one-on-one competition. Like if I root for the Boston Celtics, I probably shouldn't root for the Lakers. If I root for the Los Angeles Dodgers, I probably shouldn't root for the San Francisco Giants. I personally own both companies. I think you can actually own both. And if one or the other succeeds, I think they actually both can succeed. Time to offload ANET and CLS. Hold the semiconductors. Yeah, I don't think it's time to offload anything in the semiconductor sector quite yet. I think what you can do is move up your stop losses on these. Like ANET had an incredible run technically. I mean, this stock like absolutely broke trend and then got sucked back up into it. And so, yeah, if you're going to take profits on ANET, now's not the worst time, but I would have stop losses moved up. Like on this one, I'd want to be like no lower than 96 on this one and more aggressive. I'm actually in ANET, full disclosure. I'm in this one. I'm letting this one run. This one's got a great customer in Meta. And Meta is clearly indicated they are not slowing down. CLS has just confirmed a new high. So, I mean, if you want to sell at highs, no problem. This one also, I'd keep moving the stop loss. You wouldn't want to get it below like 123. I mean, it's like half the share price. So maybe a little higher than that. Maybe you wouldn't want to see this one get below 167 probably. We'll answer a couple more questions and then I'll probably, my computer's going to die, which is, I don't know why, but I've got it plugged in, but for some reason it's not charging. I've had trouble with my MacBook here. But anyways, I want you guys to be able to watch the football game tonight. Adobe's basically enterprise software though. They have an enterprise business, but I'm concerned that the enterprise will not offset the declines. Like I used to pay for all of Adobe stuff, and this is pure anecdotal, but I used to pay for all their stuff. I think it was $50 or $60 a month. And then once all this AI tools started coming out, I've downgraded. Like I'm now paying them only $19.99 a month, and but like that's just because I know how to use Premiere Pro. I have I bought not Canva, CapCut, so I can edit videos on CapCut as well. So if I was really being cheap, I could cut Adobe out 100%. And I think there's people out there. UNH, I'm not touching healthcare. I'm not touching, should I say, I'm not touching healthcare insurers right now. It's nasty. Healthcare insurance, until they figure that out in Washington, it's a no touch for me. TSM is an elite level semiconductor company. You've got 4 of them: NVIDIA, Broadcom, TSM, and ASML. And if you buy an ETF, you're basically getting, max exposure to those 4 companies. So it's not me going out on a limb there, but yeah, I mean, Taiwan Semiconductor, if it pulls back, I'll be buying a lot more. China coming back. Yeah, I think China's, obviously had a little bit of a rough patch, but they've poured, trillions of dollars into their own economy, and that could have some longer term implications. But yeah, I've accumulated all 3 of those stocks. Now it's not showing up in the gains in my portfolio, but I'm certainly not overweight any of those 3 stocks. I'm definitely more overweight technology, mega cap tech, semiconductors as well. I haven't discussed Amazon, but Amazon is, if you were to put 3 stocks at the top of my portfolio, Amazon it's one of them. Doesn't Adobe have a moat? No, I actually don't think they. You're right. A document cloud has a moat, but the rest of the business, not as much. Would I invest in Chipotle? We recommended Chipotle over on Equity Empire, and we had to sell it for a minus 11% loss. So I'm one of the few. I'm actually the only newsletter writer out there that posts our performance. And we bought Chipotle and we cut our losses on it. And that's what I do. We don't ride these stocks down. There will be a time to buy Chipotle. I was too early. I like the stock. I like the management. I like the business that they're in. I like the popularity that the company has from a standpoint of their customers. The product obviously is good. I don't eat Chipotle a lot. You might not be able to tell, but I don't eat Chipotle a lot. I think there'll be a time to buy Chipotle, but I don't think you have to rush into it. I don't think you're going to have a V-shaped recovery in Chipotle. Any idea cybersecurity stocks are underperforming? Keep hearing valuations and some sort of AI eating software. Yeah, it doesn't make sense, John, at all. On the premium side, I have one cybersecurity stock that I am very, very bullish on, and I believe that it will be a great investment. And I have been pouring most of my new money since the April lows have actually gone into a single cybersecurity stock. What I will say about cybersecurity, though, I wouldn't just, I think you could buy the broad-based ETF in cybersecurity. There's got to be one of them or 2 of them. That's not, I'm never going to discourage somebody from getting broad-based diversification into a sector if that's what they want to do. But I think there is going to be one clear winner in cybersecurity. Clearly a biased opinion, though, from me. Good time to get into Oracle was probably when we recommended it back in April. It was one of the top picks. I don't think I'm giving anything away here. It was a top pick for us over on Equity Empire. And so most premium subscribers are pretty well suited up into Oracle. You have a nice pullback, a retest of this area at 199 would be fantastic. Whether or not you get it, I don't know, but there's a lot of stocks making this formation where you kind of overshot to the upside, you're pulling back. I mean, even stocks like Costco, IBM, Berkshire Hathaway, I think the banks, JP Morgan, will start to look like this. This is nothing to be concerned about. You shot up, now you're pulling back. You'll have areas of consolidation. With Oracle, if you don't have any exposure to Oracle, it's not the worst time. Yeah, healthcare. We've only recommended one healthcare stock over at Equity Empire, and I think it's doing pretty well. It's actually one of the few. I've came close to a few others. But we have one healthcare stock, at least at the time, this was as of last week, it's up about maybe 18%. So healthcare, I follow the sector very closely. Believe me, I'm not telling you don't invest in healthcare. I just think, you really got to do your research. You can't just buy something that is down, or because Warren Buffett buys it or whatever. I love healthcare, but it's a minefield right now. I mean, you look at like Eli Lilly, Novo Nordisk chart, obviously UNH. It's pretty rough, needless to say. For your buy calls from premium pages, do I continue to accumulate it until it hits limit sell or target listing price? Yes. So anything in a buy range is a buy. So once, if you're not familiar, we have a premium website where I give buy ranges of stocks, and I give you a range of a price that you can accumulate it. Now, sometimes the shares kind of rally very hard off those levels, and then you don't get a chance to really accumulate over several months. But there was a great example of a stock that traded, below or in the accumulation range. In fact, there's 4 or 5 stocks that had traded in the accumulation range for like 2 months. And so you had a chance to accumulate. And now, just off the top of my head, 3 or 4 of those stocks have kind of blasted off well above that. And we'll probably be taking profits if the momentum continues on those. And so, yeah, if it's in a buy range, it's a buy. And this is exactly how I invest. And this is how I've invested for 25 years. I pick a price, and when it hits the price, I buy it. And it's always difficult to buy it, because my price is always pricing in some distress levels. Thoughts on MondoDB? MondoDB's, I hate to say it, it's probably a little small for the companies that I look at. And what is MondoDB's ticker symbol? Oh, there it was. I want to say, sorry, we're doing things on the fly here. MondoDB is probably a $100 billion company, $200 billion company. Yeah, it's too slow, too small for me. And that's a great tip that I can give you guys is, if you want to become the best investor that you can be, narrow what you're looking at. Because in the stock market, you can go invest in gold. You can go invest in crypto. You could go invest in healthcare. You could go invest in technology, semiconductors. You can invest in anything. What I do is I literally only follow about 70 stocks, and they're all $100 billion or more. Now, there's occasionally some exceptions to that. QXO, great example of that. Small cap company that I just happen to know the CEO, not personally, but I happen to know his track record. And we flowed into that. But other than that, if you're not a $100 billion company, I don't even look at it. If you're $100 billion or more, chances are I follow it really closely. If you're $500 billion or more, and there's not that many, but maybe $300 billion or more, $200 billion or more, I'm following the company. I'm reading through the conference call. This goes for McDonald's, IBM, Costco, all down the line. I'm reading the conference calls. And then occasionally you'll, like if you invest in Nike, which happens to be the largest kind of apparel, well, then by happenstance, I follow Lululemon, I follow Under Armour, I follow Ralph Lauren, I follow VF Corp, not for an investment standpoint, not that I'm going to go buy shares in them, but that, like I'm following Nike. So you kind of have to follow the whole industry. But I would narrow your focus so much. And look, MondoDB, fantastic company. Looks like they're right on trend. I wish I would follow this one. I wish I owned shares of this one, but it just goes against kind of a rule book, an invisible rule book that I have. I'm just not going to invest. PEG ratio pretty high on Oracle. It probably is, but their book of business and their backlog of business is even higher. If you listen to I don't look at ratios a lot. And look, if you want to look at ratios, they can help. I went to finance school. I studied finance. I know all the ratios. My saying, and I've said this so many times on video, is if all we had to do is look at a ratio to make investing decisions, we'd all be rich. And in the age of AI, we wouldn't need any, there wouldn't be any decision making. If it was PEG ratio goes to here, we buy. PEG ratio goes to here, we sell. Now, if you want to structure your investment around that, no problem. I got absolutely no problem with that. But at least at the way the current markets are structured, I think you can be less rigid than that. And what I rely on are conference calls a lot. I read through the conference calls, listens to them. Sometimes I listen to them and read them. In the case of Broadcom, when the transcript comes out, I'll go through and kind of scan it. But I listen to it live. I think you get a lot by just what people say. And the stock market moves on a number of different things, but it primarily moves on leadership is what I would say. And so if you have high leadership over at the company, chances are you have a high valuation. You look at Tesla. Say what you want about Elon Musk, but I think most of us can agree he's an effective leader. And so you have a high valuation there. Oracle, you have one of the greatest software and database engineers of the past ever. But he's been running the company. Larry Ellison's been running the company since the 1970s. And I can't tell you how many conference calls I've read with him, saying things on the conference call, and I've never heard him more bullish. And that's why I went very, very big on Oracle. Palo Alto Networks might be a great, great investment. Tight lips on the picks. And the only reason I'm not trying to be like, we just have a lot of people that have paid us. So if it was like 10 people that had signed up for Equity Empire, we'd be out here in promotion mode, right? If we didn't have that many customers, I'd be promoting this all the time. But you actually don't see me promoting Equity Empire a lot because people are finding it, they're buying it, they're happy. I talk to other people in the industry that can't believe, like, our refund rate is non-existent. Our cancellation rate is almost non-existent. So when people sign up, they stay. Well, he bought a handful of tickers from the premium pages, but the ones I bought are not up. You got to give it time. Got to give it time. Got to give it time. Got to be patient. Now we publish the performance of the recommendations here. And at the current time, at least the portfolio I've recommended, I think I have 2 or 3 stocks that are down. But you've got to be patient. Got to be patient. Open Door, too small for me. So I don't know anything about Open Door. It's too small of a company. I'm not going to look at it. I've made a lot of money from my videos. I hope so. KLAC, rarely see anybody talking about the company. I think I've mentioned it. I may have covered it in the past. Let's look at it technically. I mean, my computer is like, it does not like having an external monitor, and it does not like having 19 other, I don't know if you guys can, you can't see it, but I have like 50 browsers and 9 programs. I mean, KLAC looks fantastic technically, and this is beautiful technical. You've just confirmed a new higher high. You're rolling off those highs there, and again, I'm just speaking technically. This looks fantastic. I mean, there's literally nothing. Yeah, I mean, semiconductors are going to come and go, and there's going to be some hot times. So, if we get a pullback in semiconductors, allocate a little bit to it. But obviously, the Mag 7 are beneficiaries of the semiconductor business. That's for sure. That's right. Colin, once Tesla releases the robots, it's boom time. Cars won't have ish on the robots. I agree. I'm working on a video about Tesla. There was that Mark Benioff video that he shared with the robot, and everybody was like making fun of it. They're like, wow, this robot sucks. And it's like, what people have to remember is a year ago, large language models and talking with them was it was not anywhere where it is today. Like now I'm uploading like large documents and like 15 documents in an LLM and saying, do this, do that, do this. And it does it. Now it doesn't do it with exponential speed, which will come later on. You know, these things will happen at a click of a button very soon, very much like the internet over the 80s and 90s. But robots are the convergence of the software and the hardware. And so the speed in which they are going to converge is going to be a little bit slower than the software that we've seen with like ChatGPT and Anthropic and these types of stuff. But you're going to see that exponential improvement. And so, and the other thing about robots is because it's hardware and software, there's going to be even less players in that space. Because on the large language model side, you have obviously the open source models, you have Meta, you have OpenAI, you have Anthropic, you have Microsoft, you have Google, you have, I mean, those are the top ones basically right there. But there are others as well. You are not going to have that in the physical robot space. You're going to have a boatload of them from China, and you are going to have like one or two companies here in America. And this will be it reminds me exactly like EVs. 10 years ago, you had like one company making EVs, and that was Tesla. Now there's like 4 or 5, and they're very nice. Almost none of them are profitable. In fact, I don't think any of them are profitable other than Tesla. And I think the same thing's going to happen with robots. Tesla will be one of the only American robot companies, and there'll be a massive premium on that. Massive premium. So you can probably tell like where Tesla stands with me. Thank you for watching all my videos. I really appreciate it. How often do I update the buy ranges on the site? As I would say, as needed. I just updated one yesterday. I try to do it, you know, at least every 30 days. But again, it's as needed. A stock pulls back. There we are. I also pull the buy ranges off. So sometimes the buy range is on, then maybe we move into earnings, or maybe we move into kind of a rough patch. We'll pull it off. We'll also change the buy range. So the buy range might be, you know, like like for KLA, for example, or KLA Corporation, you know, we might have had a buy range down here at, you know, $600. Well, the stock rallied all the way up to 950. Well, now we have a new buy range. This is still in an uptrend. It would be a mistake to ignore this stock. Just because you missed the lows back in April at 575 doesn't mean it's not a buy here at 873. And so I'd have a new buy range on this one. For me, the buy range for KLA would be 873 and lower. And I'd have a stop loss at the April lows at like 500 or whatever they happen to be. So I do this constantly with the stocks that I recommend. And every day I'm going through the 70 stocks that I look at, looking for opportunities. And it's basically what I do. I have the pleasure of doing every single day. Can I drop a link for Equity Empire? Yeah. I'll try to do that. I'll send you. Well, what we're doing is we're just sending people to the performance page, and you can take a look at the performance if you think it's for you. You know, we'd love to see you sign up, but it's completely up to you. We're not trying to do hard sells. We're not trying to, you know, force anybody to buy something that they don't want. Colin, what is next for robots? Anything on my radar besides Qualcomm? I would say, John, stay tuned for the robots. The market is very, very narrow for robots right now. There are only a handful of companies that are working on it. Obviously, on the software side, you have NVIDIA is going to be a great player there. And so, you know, even as Broadcom, as we discussed, is going to entrench on their GPU sales, or, you know, maybe limit the upside that potentially NVIDIA could have if it had 100% of the market. NVIDIA is going to be a massive player in robotics. In fact, that'll be the next leg of growth for NVIDIA. And so I would say if I were to pick two companies, I would want Tesla and NVIDIA. I think if you're going to invest in robots, those will be the two biggest for sure. Everything else will be, you know, second place, third place, which may not be back. Appreciate it. You know, I hope my videos have helped people. You know, I certainly don't put these videos out there I mean, I'm trying to help people with these videos. I could put out more videos that get me more views. I could put out videos that, get me more subscribers. I'm trying to put out videos that help people make money because I've seen what the stock market has done for me. It's gotten me from a point where I was dead broke at one time and I had a ton of time. And so I don't actually miss being dead broke because I had a heck of a lot more time on my hands. Now that the bank account's got a few extra zeros in it, now time is of a massive premium for me these days. But I had a lot of time on my hand and I developed a lot of strategies. And when I was dead broke, I remember putting $20 in fact, I'll show you guys the account here on screen. I had $20 in an account. It was an IRA account. And I've slowly contributed to the account. And now it has, as of today, $83,000 in it. So I started with $20. It's not a lot of money. $83,000 is not a lot of money, but it is a lot of money actually in an IRA account because you're limited to, I think they've bumped the limits up to maybe $6,000, but for a while there, I could only deposit, I think it was like $2,500, $3,000, but they continue to raise the limits, which they should in the IRA. But obviously I've seen what starting with $20, and when I deposited that 20 in there, I had to check my account to make sure I had the 20, and I probably had like $38. And so I put like half of my net worth in that IRA account, and it's been a great decision. And, just trying to share as much as I can. Clear direction on how to follow calls on the premium pages so that people know when to continue. I agree. I will continue to update and make the site as simple to follow. If you ever have any questions, you always reach out to me. But what I would say is if a stock is in a buy range, it is a buy. And just know also that if a stock is in a buying range, that I am personally buying it as well. Oh, robots be subject to tariffs? Robots are likely a post-Trump era story. So I don't know about these tariffs. I don't know how long they're going to last. And it all depends on the next election. And that's going to be a wonderful story as we move into, I guess it's 2027 will be a big kind of like ramp up of the election cycle. And then obviously 2028, I believe, is the actual election. That's going to be a wonderful story. And I can't wait to cover it. I think it's going to be one of the most fascinating elections of our time because you have both parties obviously competing with each other, but inside of each party, there'll be competitions there as well. And it's going to be just an unbelievable time. Bottom of the middle of the channel. Yep. Anything. I'm a channel investor and I'm a simple guy. That's at the top of the channel doesn't necessarily mean sell. Doesn't necessarily mean you don't buy. I've certainly bought at the top of channels before, but there has to be very specific fundamental reasons why you would do that. But technically, yes, middle or lower on a channel, it is a buy. And you can just see it here with KLA. For 7 years, it has been channeling upwards. And every time it got to the bottom of the channel, you should have bought it, and you should have bought it very aggressively. And I'm on a daily chart. You've had just days to buy this one at the bottom of the channel. That is why it takes incredible patience for this strategy. That you can't just, make KLA trade at the bottom of the channel. You have to wait and wait and wait. And this is the discipline that I bring to my side of Equity Empire. Is I don't care if I don't recommend something. I really don't care. I don't care if I recommend something and it stays there for a month or it doesn't really go up that much. I don't care because I know these patterns play out and they play out to a high level and they play out over a long period of time. Duolingo, I mean, I've heard a lot about it. It's too small of a company for my taste, but AI, I think has, I think I can probably learn a foreign language in a year or two. AI is going to be teaching a lot of people foreign language. And so I don't know what Duolingo cost, but there's probably some limitations to how much they can charge. Google shareholders are celebrating as well. IBM is close. IBM is very close to a very good entry point. Depends on how you look at this one technically, but I would say it's very close because you've actually you have two different trends, but it's also pulled back from the highs. Deeper pullback would absolutely absolutely be good. Well, this is good to hear. It's making money watching my videos than scrolling Twitter and Reddit. Not that scrolling Twitter and Reddit are a problem. Thank you, Mark. I appreciate it. What would be the 5 best stocks to buy in the current market for a long time? Broadcom, Nvidia, Oracle. There you've got your database software. We probably should diversify a little bit. I like Amazon, and I mean, this is like like I would just say, don't take my advice here, but Tesla as well. That would be like my all-in portfolio, like my YOLO portfolio of big cap. Okay. There's a million small caps that you could be investing in. They're a great investment. I just don't follow them. CoreWeave. CoreWeave has some real competitive advantages. It's still too early for me on this one. They IPO'd in April, May, June, July, August, September. We're coming up on 6 months. I do not buy stocks that are 6 months off an IPO. In fact, I only start looking at them 6 months into the IPO. Now, we've done videos on CoreWeave, I think on the premium side. I think I have. And I listen to the conference calls. I follow this company, but I'm not even thinking about buying this one until like as I look at this chart. You also are a little small, $40 billion. But really, since the June highs, this is a falling knife. Lower lows, lower highs. I'd wait for that to reverse. You need for this one to get back into the 106 range to confirm that. My guess is you're going to retest 64 on this one. You're going to want to retest this high that you made right after the IPO. And that happens a lot. Palantir chart looks almost exactly like this. Where they IPO'd or they might have been a SPAC or one of these, but they came back and retested multiple times, kind of the initial pop. And then, obviously the rest is history. CoreWeave's great company, but too early for me. Seasonal downturn in September and October. It's possible, I don't tend to like, I look forward to the downturns, but I try not to predict them. I try not to be like, oh, we're heading into, here's the reason why the stock market will turn. It will turn if, the technicals will show you that it's going to turn. And this is the SPY, which is a, proxy for the S&P 500. Is there anything on that chart right there? And we're at this blue line, essentially all-time highs. Is there anything on the chart that's telling you you're about to turn? Not really. You just confirmed a new higher high, which means if you do turn, that you should buy the dip, if you will, rather aggressively. So there's the SPY chart. Is there anything on here that says we're going to turn? Nothing right now. And so I just kind of let it tell me. A break of the previous highs, which on this SPY would be 607, that would be bearish. You want to come back here, retest the highs, hold 605-ish, and then bounce higher. That's what you'd want to see. That'd be about a 10%, 8% drawdown, which would be, aggressively buying that. Obviously, you say that, and it's obvious, but you want the SPY. Now, if the SPY meaningfully breaks through 605, that's when you start to say, oh, has something changed? Or is this one of Trump's just, slap tariffs on everybody thing, or, some country A invades country B, or, one of those things. The other downturn we had was in 2022, or the last downturn that we had. Other than the April downturn, but this was the start of rate hikes. It was like the end of easy, cheap money. And so obviously the stock market sold off into there. And so you have a break technically, And it was pretty, and we actually did this on the investor channel. You can go to the investor channel and there's a whole playlist on the investor channel, which actually, I don't want to say it telegraphed, but I, like that was, I don't want to say is easy, but I think even it's might be even still on the homepage because I don't change this very often. Yeah, here it is. 2022 stock market crash. If you go back and look when I published these videos, it was before the stock market actually crashed. But you had the technical break. Like, here's this video. This isn't good. It's showing you the technical break. I saw things technically that weren't great. When the stock market is bottomed, it's a Federal Reserve type of thing. And then we started signaling, hey, the bottom is here, and the stocks reversed itself. Certainly not on here trying to pat myself on my own back, but there's video evidence of the last crash that I telegraphed it, I believe, starting in March, and it really didn't was obvious until several months later. And so, I have, video, 3 indicators that predict a recession and a stock market crash. This was published, more or less before the stock market started crashing. This was published in March of 2022. This was before the stock market really rolled over. Like March of 2022 was right in this area. So the SPY was still at like 420 and it bottomed at 345. Now, I'm not saying I'm some kind of savant and then I predict all of these things accurately. But it's not difficult if you follow this stuff as closely as I do. You saw this technical break. I remember doing videos on the channel right here. The S&P 500 looked like that. And I was like, this break right here is as ugly as it gets. I remember in January it broke and I was like, oh crap, that might be it. And it was it for a period of time. And then we started doing videos in this time frame, like, hey, this is a great time to buy. And trust me, when I posted the videos in March, people were like, oh, you're stupid. It's still going to go to the moon. And then when I posted, hey, this is the bottom, people were like, hey, it's not the bottom yet. And so what I do, it's no offense to anybody watching, but I use the comments of my videos as a contrarian indicator. If the comments of my section are bullish and they're like, to the moon, it's probably going down. If they're bearish, it's probably time to buy. Does Trump have a sense of disappointing from stirring up the market volatility perspective? Or are you expecting markets to be as tame as this? I mean, Trump's a wild card, and I think as his term goes on, because we're only like 5 or 6 months into his term, as his term goes on, his impact will diminish. And I also think from a legislation standpoint, they are not going to pass anything significant for the rest of his term. He will likely lose a majority, or the majority will get even thinner on the next election cycle, which is next year. So they won't be able to pass anything the last 2 years of his administration. And he's going to be tied up in court. And if they lose the majority in either the Senate or the House or both, he will just get impeached for the last 2 years. And I'm not saying he will get impeached. I'm saying that the Democrats will basically impeach him, which is what they did in his first term. It'll just be chaos from that standpoint. And the markets will just learn to ignore it. That's what I think. Thank you very much, Mark. Appreciate it. Kunal. I know I'm very familiar. Thank you so much. Really appreciate all your support. We're at all-time highs in the market. From a portfolio standpoint, are you buying any stocks or raising some cash? I think you should always be raising cash. I think you should always be invested in the market, depending on your age. I'm speaking broadly to people that are still trying to build their wealth. We'd be having a completely different discussion here if it was to 75, 80-year-olds at retirement, in retirement. So I just want to always caveat that. But you should be invested, but at the same time, always raising some cash on the sidelines. I have 2 different accounts. I have I've consolidated around Robinhood, but I have some accounts at Schwab as well. But I have what I call kind of a shorter term kind of opportunity. That's up 24% year to date, but I've gotten lucky on some stuff. And the buy and hold traditional IRA, that's up 18%. And what I do is I raise money by kind of trading, actively quote trading stocks, and then I dump that in the IRA. And that's kind of what I do. And then occasionally I've sold out of my, I'm probably the worst person to talk to from a portfolio management standpoint, because I've sold my entire portfolio twice. In fact, I've done it 3 times, once for a job, but 2 other times to buy houses. And, it was a great decision both times to buy houses. Thank you very much. I'm trying to provide as much value as I can. John, who covers small caps, made good money. I agree. And look, we're not going to be perfect, but we do post the performance. John has multiple stocks, I believe, on the small cap side that are up 100%. Now, his small cap, that's going to be more volatile, so you got to have the stomach for it. Occasionally, you'll have stocks, down 15, 20%. But he's done a great job, and he's easily the best small cap guy that I've seen. He called Credo. He was, he texted me the other day. Credo reported earnings. If you're not familiar, Credo is like, they kind of provide some semiconductor technology. We recommended it to our subscriber base. Maybe this was 2 years ago. I think their stock was maybe like $20, and now shares, I think, are like at 100. Yeah, they're at 134. So, and this was all, my name went on the report. So people think, oh, you recommended Credo. I didn't know shit about it. And then John recommended it. It just happened to go out in my name. So Whirlpool, I'll be honest with you, Andy, I don't know anything about Whirlpool other than they make a great product. I think I probably have a few of their products in my house, but I don't actually know anything about Whirlpool. Thoughts on POWL? I'm not sure. I'll take your word for it. I agree. Wait for CoreWeave. Wait for all the dilution. Wait for the drain out. There'll be a time for CoreWeave. I don't think it's yet. Do you save cash for buying the dips, or do you go into margin? I rarely do margin. Let's see. Robinhood gives me access to it. I'm rarely using it. I'm a cash guy. Now, in hindsight, should I have used the margin? Hell yeah. But can we do one of these live videos for paid subscribers? Sure. Let's do it. I'll maybe post something on the site to try to get times, and then yeah, we'll do something. I think I can make these private, or make people log in or something. I don't know. We'll figure out a way to do it though. That's a good idea. Yeah, I agree. It's hard to be bearish when they're about to cut rates. And I think you're in for a cycle of cuts. Whether they need it or not, I don't know, but small position on CoreWeave. And yeah, CoreWeave's definitely a falling knife right now. I like CoreWeave. I like their product. I think they have something. They're not just like a box with some GPUs. Like they literally, I mean, obviously they have a close relationship. But this is as ugly as a chart, but it's very typical in an IPO. You have a spike, you have a drop, you have another spike, you have a drop. Now you're waiting for some consolidation. Tesla has been, I mean, do I need to pull up the Tesla chart? People always laugh at Tesla. Even more so now that, Elon's gotten more political. But here's a chart of, like, while you guys are laughing at Tesla, here's a chart of Tesla. I've owned this stock for a very long time. Okay, I remember actually sitting on the playground at a school, and I bought it. Split adjusted down here at like, split adjusted wasn't 15. It was a different price, but the stock is split. There's the chart of Tesla. If I just showed you this chart, take away Elon Musk, take away political, take away, anything, there's absolutely nothing to laugh at and nothing scary about that chart. And if that chart continues just this simple trend, things are good. Under 30. And you're a subscriber to Equity Empire. You're doing better than I was at under 30. Well, really appreciate it and hope to have you for a real long time. Hope to have you for a very, very long time. And I will do everything I can to get you to that early retirement. Or if you're crazy like me and you want to sell your portfolio, go buy a house or something, certainly hasn't been a bad investment for me. I'm not telling anybody to do that, but the house I'm sitting in right now was paid for by XPO, which was Brad Jacobs' previous company before he got onto QXO. So that's how I knew about Brad and why I have such fond feelings about Brad, because I bought QXO as a penny stock, sold it in the 20s or 30s. It's probably way higher now. In fact, maybe it's split or something since I've sold it, but I sold it back. When did I buy this house? I can't remember when I bought this house. It was about 10 years ago. And so it was probably in the 20s. So is it back in this range? Oh, maybe it was 15. It was $18. But I sold it here, but I bought it all the way down here. Bought it here, ran this whole wave up, and then I bought the house that I'm sitting in right now. So it's very, very fortunate. Not an expensive house. I don't live in like a mansion or anything, but for California purposes, very, very blessed. When it comes to raising cash, do you advocate parking idle cash? You can if you want to. I'm not big on like maximizing. I wouldn't even call myself like a portfolio manager. There's certainly people out there that are going to have a better beat on that. Like, hey, put your money here, do this. From a tax perspective, I'm never big on like trying to avoid taxes and those types of things. And part of it is because I don't have, I've only had like a quote real job where I drew a salary for a year. And it was this like a year or so ago or 2 years ago, I worked for MarketWise for a year. That was like the first real job I had. So I like just being a business owner, you can really, manipulate's probably not the best term for it, but you can really control how much taxes you pay based on how much you want to invest in your business. And you all know this through looking at like a stock like Amazon. Amazon has controlled how much tax that they pay, and they're often criticized by that because they invest so much into the business. And so if you want to, if you think you're going to have a huge amount of taxes, well, you reinvest. I've done it in my house too. They were giving out like 30% rebates on solar. I mean, I'm all about saving the earth and all that other stuff, but I bought solar for my house because I got a 30% tax write-off on it. I've bought Teslas in the past because you get a tax break. I've done other things from that standpoint. So I'm not like a portfolio or a tax guy. If you want to park your idle cash in whatever you want, like it's not the worst thing. Oftentimes for me, in a 4%, 5%, whatever they're paying you in these brokerage accounts right now, that's good enough for me for the most part, because the cash will only sit there for like maybe 3 or 4 months, 5 months at the most. But if you want to park it in something a little bit, by all means. I'm more of an analyst rather than a portfolio manager, is how I would say it. Amazon is still operating like a startup. I love it. Duolingo. I've been asked a lot about Duolingo. I've never even looked at the company because they are too small. Ooh. Holy cow. Should have some support here though. Support at 260, more support at 250. And the highs here at 201. Would not want to get below 201. You get below 201 and it would not be good. You actually don't even really want to break 270 on this one. 270 though, you're coming back to 250. This isn't that bad. Technically, you've recently, I'm on a weekly chart. Now I know you've gone weeks and not seen the stock go up except for 1 week, it looks. But you confirmed a new high at 540. I know we're sitting at like closer to 240. But it doesn't look bad. It's a $12.5 billion company. I like to look at companies that are doing that in revenue like in a month. Just my taste. I would like to deduct my rent from tax. Technically, my house is my office and for my remote job. So I do that with my house. I'm certainly not a tax expert. I do my own taxes, so I understand taxes. And I suggest everybody do your taxes at least once so you understand them, and then you can start to farm them out. Mine aren't overly complicated, and I've done a good job kind of like bookkeeping, if you will. And I went to college. I studied accounting and all that type of stuff. So I have that background. But yeah, the office that I'm in fact, on the other side of this, my wife has an office. And so this is tax. It's not a big tax write-off, but there is some small advantages to having home office and doing, most of your work there. Bigger tax breaks are, prepaying expenses and those types of things, depending on the type of business that you're running. Now, I know that they changed a lot of the law in the big, beautiful bill, if you will. There's some accelerated depreciation. And so I will be looking to see if I can't take advantage of some of that as we move into the back half of the year. But it hasn't been like a huge year for me revenue wise. It's been a big investment year, though. We invested a fair amount of time and energy into Equity Empire, and it actually I had to put on the sidelines a lot of my other projects. So some revenue gains, some lost, but I'm happy. I got to drop my kids off from school. I get to pick them up. As long as I get to do that, I'm happy. We're 5 minutes from the football game, so I'm going to hurry up. A JPM or GS should be trading at tech multiples. I sold my JPM. I had a lot of JPM. I sold it basically at the price it's at right now. Now I could look back and regret that. I am going to try to rebuy back into JPM. God knows I want to be in this stock. But Jamie Dimon got on a conference call and says, I don't like buying the stock at 3 times tangible book. And so when Jamie Dimon says he doesn't like buying the stock, it means I don't want to buy it either. But yeah, pullbacks in this one should be aggressively bought, obviously. Jamie Dimon is, he doesn't need me to say anything nice about him. Duolingo's product is whack. Yeah, I've got to imagine like these AI are going to be able to teach me language. They're like expert in language. So obviously an AI now, Duolingo interface, gamification, kind of I don't want to call it a one-trick pony, but one-trick pony in a positive way. If I want to learn a language, I'm probably going to go to Duolingo. I just I've never even traveled outside of the United States. So I'm certainly not their customer, but I've heard other people talk about, hey, I'm having Grok teach me a new language. I'm having OpenAI teach me a new language. That has me concerned for them. Opportunity in AMD. I like AMD, but it is off the podium, if you will, of semiconductor companies. But technically, this looks beautiful. You'd love to retest back up here at 230. But technically, you're fine here. But I think if you're going to be in semis, it would be a 5th place for AMD. You're going to have TSM, and this is no particular order, TSM, Broadcom, ASML, and NVIDIA. Those are going to be your 4. Anything after that is less. is how I would put it. Thank you everybody for showing up. I don't want to cut this short, but I know that a lot of people are going to want to watch this American football game that I think is kicking off here in a minute. I'm going to go have dinner with my kids. Thank you for tuning in. I know that we covered Broadcom very quickly here. I will come back later tonight and record something. I will record something just for the premium side. And so expect maybe a 10 or 15 minute video where we talk about just Broadcom. That'll go to the premium. Yeah, AMD for inference. Absolutely. Custom chips. We'll play into that. NVIDIA is very good for, I think they all have tailwinds in their business. AMD is also very much more diversified. They're not just data center. Data center is obviously a huge bonus and a huge market for them, but they have a very diversified business. And Intel, the disaster that is Intel, has certainly helped them. And I think their CEO is, obviously fantastic. She's great. Thank you very much for tuning in. Thank you guys for coming. We'll be back some other time, some other place on the premium side. Expect a Broadcom video. It won't be till tonight. And I say that Pacific time. So I've got 4 or 5 more hours before I have to jump on there. But I appreciate everybody tuning in. I promised we would end this before the football kicked off, and I think it's about to. So thanks for tuning in. We'll be back some other time, some other place. Pat yourself on the back if you had Broadcom, Google, or any of these other stocks. It's party time. Enjoy the football game. We'll see you tomorrow on the main channel for the Fang Stock Recap Show. And Joe Little, thank you very much for the $9.99. I really appreciate it, Joe. Colin at myequityempire.com if you want to email me. And we'll see you soon.